45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Tonight's video, we're just going to talk about the dog days of summer and a little bit of talk before the Fed comes in next week and explore what I think will happen. Let's get into tonight's video. Well, welcome everyone. It is Monday night. What a interesting day. It's kind of been just reflecting on how we've been trading lately. And if we look back last week, we were kind of trading just below 5,900 to mid 59s. Then we got a little bit of a burst at the end of the week after the employment numbers, and now we're doing kind of high 59s, mid 60s. We're sitting here not too far away from all-time high on the S&P at, I believe, 6160 in rough numbers. And the markets are really
showing that classic summer lull.
Sorry, markets are really just kind of in this doldrums. I mean, there's nothing out there. I mean, there's the folks were meeting in London, I guess, with China. No rhetoric out of there, no noise, no nothing. Only noise is in Los Angeles, and I think coming to a big city near you is this weekend. I think, meanwhile, markets don't care about the turmoil that's going on in the streets. That's always interesting to see what's going on. I've been, fortunate. I've been through a number of these going all the way back to 1968. Where we've seen this type of action on the streets. It's, I think, a little more sophisticated, more organized now just because of social media and things of that sort. But anyway, it's really getting hard to make a call in this market. We're just seeing everything trying to stall, and this has been what I've been talking about for weeks. We've just been grinding pretty much in a sideways range. We're now trading outside of that bound just a little bit up above that 60 handle, but for the most part, we're just still chopping around. There's no VIG, there's no big pushes up or down, and there's nothing that's going to drive this. I'll show you tonight. We'll go through some of the elements of what I think will be not necessarily reviewing, but at least bringing us further into context where we are right now. And I think we're very close to seeing a peak in a number of things, and we'll pretty much go from there. I wish there was some riff that I had or something that was insightful to bring to the community tonight, but there's nothing out there. I mean, it's probably the worst day, and always Tuesday's turnaround Tuesday, but there wasn't anything that happened today, so there's nothing really to turn around from. We're really focused in coming in, CPI, PPI, don't have any great expectations there. I talked a little bit in the Substack last night about that echo bounce that I keep talking about that's likely to happen in CPI and PPI. So I don't think the Fed's going to make a move. I know a lot of people are going, they're going to lower a quarter, but they always say that, right? That's what they always say. Maybe they do, maybe they don't. Is it material? Why would they? Labor statistics, we just had a report, better than expected employment numbers. JOLTS numbers were up. I mean, what are they going to lower rates for? Trump's pushing for it. He always pushes for it. But Powell's probably going to do the opposite just because of their great relationship they have. The only other thing out on that relationship is Trump is actually getting ready to pick the new Fed. So Jay Powell's out of a job. He knows it. So there's a lot of dynamics that are going on around here for sure. So nothing really material though. Like I said, I was hoping that sometimes I can come up with some real insightful things. Just not there. So like I said, I hope we don't have to go through the whole summer, these dog days of summer where we're just kind of meandering around and there's no real directional move. I do think that the markets, this is, like I said just a minute ago, is getting tired, and I think we're still looking at some kind of reaction, nothing big, I don't see any disasters coming, but there's just no reason for the markets to go up. And there's no reason for the Fed to stimulate because they don't need to stimulate. We might even be called what everybody talks about, Goldilocks, not too hot, not too cold, just right. So that we're just there. There's nothing really to talk about when it comes to the economy there. So let's go ahead and let's dig into the show. Probably get done early tonight. We'll see what goes on. But let's go ahead and get into the database, which is I think is I was looking at some things that I will point out to you. So let's go ahead and get into that. So this is what kind of popped out at me. We're at 74.74 bullish. This is what is considered fully invested. But there's some other things that have been going on in the background, which the nice thing about having the sectors and especially having my own sector mix that is brought into the system. If we look at where we are in the as far as it goes right now, typically we get 35 to 40 some days here. If we just look at the duration right now, we've got 31 of 58. We've got 4 of the sectors, 27 of 40, 32 of 32, 33 of 30. So we're extended a little bit. And what sectors are those? Those are transportation, technology, and services, healthcare. And this very first one, capital goods, has been long for 31 of 45 days, and we're up 3. The next one down is 33 of 35, and we're basically flat since we entered that sector. So sector rotation got reasonable. We got up to 9 sectors. I would suspect sometime in the next, I'm just going to throw out a number, a week or so, that we will see the market start to we'll start to peel off some of these sectors, and maybe we'll get some rotation. We'll go from 74. The numbers are 68 is the next support number, then 62, 58, and I'll just cover that as that happens if indeed we get that. Typically, this is about the peak. Around 72, we're printing 74. So this is the point where we should see these sectors, and this is a short-term sectors start to pull back. On the intermediate term, we're in a more positive rotation there. So that's going to also add support to the market. So this is why I continue to say markets are kind of catching a bid every day. There's still that underlying bullish bid that's there, but there's no big excitement. Nothing's really running up of any sort. So there's just nothing there. So let me just look at a couple other things here. I think that was everything I wanted to cover in the databases. Really nothing there. I've got some stats running on the other page right now, so I'll see if that comes up in time for us to kind of look at that. But let's go ahead and let's just move on and start to get into the technicals on the S&P. And you can see here's the pattern I've been talking about. If we go out here, we're looking all the way back to the 13th of May, basically just sideways. Like I said, we're trading at the high end of that range, but there's no trend mode. There's a very slight angle of attack that's going. One of the things I've been talking about is watching, and this is where we were supposed to come into that second week of June and start to see some movement down where we're going to see a loss of momentum. You can see the PPMs are all starting to roll down. We're still kind of flat here, even though there's some losses. We're basically flat. So anytime we get under 0.15 on the indicators on PPM 1 or 2, what that means is we're no longer in maintenance mode. I'll show you. I'll bring up the sheet. I've already ran the fact sheet for tonight. But when we get to that mode, then the markets become vulnerable, at least to a penetration of those values and a potential going down. I still think there's a better and even chance that we're going to go down to the 200-day moving average from that standpoint. So let's take a look here and just kind of break some of this down. I said it's pretty boring forecast if we just look out, and this is because of this. One of the things when you use machine learning and you're looking at any type of prediction methodology like this, when you have the previous period, even with high volatility or low, you get these echoes off of the patterns, and this echo is flat. It's just completely flat line, really all the way out. It's saying out into July, where I just moved my cursor out, is going to be flat. I believe that will change between now and then. We'll have some things to go, and I'll cover I'll bring up the treasuries tonight, and I'll talk a little bit about the Fed. I mean, we're really going to start. It's already starting. You're hearing people. Oh, they're going to. I see people commenting both on the channel and Twitter and what have you. They're going to lower it 25 basis points. So, I'll save that conversation for a minute. But the indexes aren't telling us anything. Like I said, we're a stone's throw away from, no pun intended there, to 61.60, which would be an all-time new high. Still think we get a rejection off there. I talked about that in last night's Substack. And if you're not getting the Substack, just a quick kendallreport.substack.com, and it's $8 a month. You can get a full year for $80 for $6.50 a month or something like that. There is a 7-day free trial, so if you can still opt out if you don't like what I'm doing. But all of this stuff, folks, is just really, this is just boring stuff. I wish there was something I can tell you. We're back into those. Probably those weekly and multi-week straddle strategies. They just can't continue to go. We got in to the higher end, but if you're doing out of the money straddles, most of those trades that I suggested throughout this whole period, going back into literally back into April and early May, those trades all worked out really well. And so that's pretty much it. So before I move on, let's bring up this. This is for today. I thought this was kind of interesting. We've got kind of that consolidation. I noticed the primary trend is a doji star, probably evening star, since you're at the top end of this thing. And so if you're a candlestick kind of person, that pattern's jumping out. Cycle position is neutral. Indecision, mild positive. This is what I'm telling you. It's just these are really boring. Even the AI can't dig up something to sound good. We're looking at here. I'll just blow this up. We'll get R1 29. So we've been seeing numbers in the 20s, 29. That's going to be a number. Mid 60s, 60, 48 is all of a sudden we drop to 50%. And then on the S side, 59.94. So this is what I was talking about in the opening comments. We're really high 5,900, mid to low 60 handles, and there's no real material news coming out of any sort. We'll get CPI on Wednesday, but there's nothing here. So so it's giving us R1. Like I said, 75 probability, S1 70. So S1, R1 are going to be your primary ranges. And I suspect if we come over here and bring up the trades, R1 breakout. So if it broke out above 30, target would be 48. That would put us up into that R2 number. And a buy one S1 test here, you could buy 59. 95, 98, so you want to buy S1, and then you're looking at target of 29. It's pretty boring trades, but that's basically what's going to come out of this. And so we got an inside day working, the doji star. We've got 500 showing indecision, minimal gain on low volume tonight. We're just seeing really tight range. This is the analytics for this moment. And I think this is I have some research to do, but I have this sheet up. But somebody brought up, I think it was in Twitter. I don't think a lot of people saw the post, but if we go to the you can take that manual that I put together for this sheet and actually probably put it in Claude and put in the indicator. You have to know which indicators to do, but it's the ones I show you every night. It's all the ppms and 1, 2, 3, and 200, all the WTARs and all that. And you just copy the data window. Probably could put all that information in there and tell it to build you a dashboard. You'd probably come up with something, or at least you could probably tell Claude, ask it to put some trades together off of that data. So there's a lot of information there on that. Let me just see if I can show you real quick, because that's probably worth a quick look here. Yeah, bear with me 1 second. I'm just trying to bring this over. See if I can find it. Of course, I cannot. Yeah. I hate when that it's not visible where I'm at. Anyway, so but I'll put something together for that, because those of you have it, you might be able to, even though you can't get these exact sheets that I have right now, you can generate a lot of this information just from what's on the what's in the manual itself. So there's a lot of pretty good information in there. I think it's on a normal Word doc, it's like 18, 19 pages, so it's quite in depth. So that's a lot to submit, but I'll go through that, because I think it was a good comment that somebody had made. All right, so let's move on, and let's go on to the NASDAQ, and that's going to give us pretty much the same kind of situation. We had a little more strength yesterday. The beta is always a little higher than the S&P. But you can see all the indicators are ppm 1 and 2 are turning down. Nothing drastic here. It is showing that we can get negative on the 10s. That means we could challenge this 10 and 21. And I brought up this before, and it seems to happen. It happens on a lot of charts. But let me just bring something in here. Let me make this full screen. So when we start to get I'm going to draw this in so you can see it. What happens here is you can see the 10-period moving average and the 20. These averages get very close together, and typically that's in the final phase of a sequence, and then we'll get one of these moves down. And in this case, we got the giant move. That pretty much was all the action for the whole year. What we saw in March into April, and it was all based on nothing, right? It was based on inflation that was going to happen because of the tariffs, but the tariffs never really happened, maybe 10%. I saw a interesting little interchange with I think it was Lucknick was in front of Congress, and a woman was saying, do you realize that we can't make bananas in the United States? What's the tariff on bananas? And he's like 10%, depending on the country. Well, what is it? She's drilling him, and I don't know, what are bananas, $6? So it's maybe 35, 50 cents on bananas. I mean, that's all they got. They're down to bananas. So the reality is we've seen all of these inflationary numbers come down. All the metrics are basically fine. That's why we saw this recovery, and everything was overhyped, and everything that the end of the world that was being presented was a false, we'll call it a false flag in the markets. So let me just move this over, and I'll show you where we are right now. We're coming into this 10 and 21, very, very narrow, very close together, almost similar values. And typically what's going to happen is we're going to get a breakdown. We're probably going to come down to this 40, and this is on the NASDAQ now, so 27. So if you just go out into last week of June and look and put your cursor where the WTA are. If you have the indicators, you can get that value. If you don't have the indicators, kendallreport.com/indicators, and you can put 24 on there if you want, but it should bring it up, and you can find out more about how to get those. But the bottom line is, just so you know, we don't offer the subscription or the rent to own anymore. It's pretty much, there wasn't enough activity in those areas. Everybody pretty much just buys them. So we just took those offers out. They were more of a pain in the butt from a operational standpoint. So that's gone. But anyway, these patterns that are setting up typically will come into these next level patterns. If we can get below the 1021, we'll come up with that rising 40. And like I said, I don't expect any big drastic moves down. I don't know what would cause that. Something we're unaware of. Maybe if things really get out of hand with this violence that's going on in this country right now, that maybe there's some disruption. I don't see it, but anything's possible, right? So let's go on. Like I said, we're about 21 minutes in, and I'll have a chance, think about some questions you might have, because I think we'll have some time when I get through everything to maybe talk about some things, and sometimes just one good comment is enough to get things going. So okay, let's move on. Let's go to. I don't think there's much here. I'm just gonna go with it. We'll go into the treasuries here. Treasuries, got up to 51, back to 40, 48. A few ticks down, coming back into the pattern. This range is just going to continue, and I'll draw this in just so we can all see. Sorry about that. This mouse wheel really, when I spin it, sometimes it gets out of hand. All right, so let's take a look at just a couple patterns here, and I know folks like to call the Fed's going to do this, to do that. I'm kind of wait and see, but if we just look at the ranges here that we've been locked in for the most part. I mean, this is your range right here, and you're looking around down around the 435 now, and I've been expanding this range, so it's possible that we come down, but all the indications are we've got directional moves that's drawing up lines. The flow is still higher yields on the back end of the curve. And even if the Fed were to drop rates by a quarter, that's fine. I don't think there's any real effect or any on sentiment or anything from that standpoint. The back end of the curve is not going to move. It's just not. This is still there. I think I talked about this since we're here. Talk about a couple things. Somebody keeps posting that the Fed is buying securities, and they have been buying some securities, but they're in the context of normal operational ranges. They're not doing QE. All they're doing is sometimes there's maturities that not much is laying out there. They'll just buy them back, and then they'll reissue because it makes it cheaper on the balance sheet. There's a whole lot of actions. You have to understand that the Treasury has, and this is Treasury buying, that this type of activity is normal market making activity within the context of the larger portfolio. So if they can save some money by taking down some maturities and then reissue them, they're going to do that because there's literally auctions every week. So sometimes I'll be buying some of these things back just to, it's a buyback program they have. So I don't, that's not material. It's not anything to fret about if you see that. So if, there's somebody that sent me a couple emails and maybe even on Twitter. So I appreciate that, but that's what's going on. I think I answered one of the emails that somebody sent. So, but I just want to bring that out in case others are seeing this. This is really just kind of normal market activity. But overall, this is kind of the range. We do have, higher expectations. There's a fib target up here that's at, up just at 484 number. I think that's the number. I'll have to, that's 485 number. So this structure is just fine. There's nothing going on here. There's nothing going on in the Treasury. There's no, lots of massive selling. None of that's happening. This is just how the market looks when it goes. You have to remember the bond market is, I should get a number, but in equities, it's 20, 30 times the size of the equity market. So there's a lot of money flowing around here as the treasuries are used because of reserve currency status, all those type of things. The treasuries are used for a multitude of everything from collateral on deals to what have you. I mean, even like I think somebody pointed out like Tether, any of the stable coins, they're going to be using treasuries as that backdrop. Okay, so it's a big market and it facilitates an awful lot. All right. So we'll go ahead and bring up the Dow. I don't think there's anything going there, but just to keep a track on it. Dow continues to have, I was talking about this the other day, upward slope. You can see it's trying to turn up, probably head back toward the 101 to 103 level. I don't see it collapsing here. So that's another sign that probably the treasuries are just going to continue sideways here. When we did see some movement on treasuries, we were seeing a fair amount of selling in the Dow. And that rightfully so was the correlation was appropriate. One of the things that was going around when that bad 20-year auction, everybody jumped on that. This is it. No one wants the U.S. Treasuries. I've explained that over and over, but that is really a in-between maturity that it's always used for the purposes I was just talking about for filling gaps in the portfolio. The 20-year does that, and really the 7.5 does the same thing. So, they are what they are. They're not the primary maturity that where most of the money is being raised and managed. So, but you can see this nice little curve here on the Dow. So don't see anything scary coming on. I'll just go over to the weekly, because the weekly trends were a little stronger down. So we do have some pretty good resistance here right at the 90s, 98 level, 99 right in there. That's going to be pretty good resistance for a number of weeks. But you can even see here, the algos are suggesting that we've got a turnaround coming and that we're at least going to start to bottom here. No big rallies or anything like that, but at least a stabilization, which is probably a better term for what we're doing here. On the gold. So this is that weekly chart on gold. We're getting that squeeze down, that normalization of the volatility. It looks like we have probably another week or two where momentum is going to be lost, but I've pointed this out, I know, a lot of times, so apologize, it's the only feature in the market right now. On a weekly basis, even this downward forecast here, let me zoom in on that, this little dip here on the indicator, that's still a positive integer. That's still in a trend mode. It's above, that's forecasted to be above maintenance mode. So we're just seeing really just this kind of drifting, and the scenario that I've been talking about just continues. We've got this big upslope in gold. We're on our way. I think the highest numbers that we have right now. Let me just see what the high, yeah, so this is the high water Fibonacci target right now is, let me just bring it up down here, 38.44. So there's still a lot of upside, and this has been nothing short of a parabolic move. And I believe what we're doing here, if we were to just look at, let me see what I can bring this back a little bit. Maybe we can spend a minute doing some analysis here. Yeah, if we go all the way back to 2016 in this trend, let me take some of this noise out. Let's go to a monthly graph real quick. Yeah, this really breaks it a little better. So we got a 5-wave sequence here, and we get this big correction. Now we've got 1, 2, and this is probably a wave 3. When we go to monthly, here's that 37, 38 handle I was just talking about projecting on the weekly. So this thing is absolutely parabolic when you look at it at this level. And so there's a fair amount there, another 400 or 500 plus on gold in this pattern, and then we probably get into a wave 4, and then there's probably there should be higher prices down the road, and we're looking at, you know, all the way out into right now, just where this crisscrossing is happening, that's 28, 29. So some stage we'll hit a peak, we'll get a big consolidation range, probably 1 to 3 years at least, and then from there maybe higher prices going into 2030 and beyond, you know. So it's going to get interesting down the road. But gold is definitely, this is, you know, some super cycle bull market trend here. This is everything Adam Schiff said it would be. Okay, we'll give him credit. All right, so hang on, let me get to the exchange I usually use here. So let's stay long term. We bring up Bitcoin. Bitcoin's got an argument, folks, that this is the final move up, and I think this is. I haven't really covered this much, but let's just go at it from this whole pattern here. So we're looking at this is 1, 2. This is probably wave 4. This wave 5. And what we may be getting is this giant wedge pattern. If we look out at the indicators back in 23, when we were at 27,000, the projections were for 80,000, 105, 120. And I remember talking about that back in the day, and everybody thought, you know, I know a lot of people wish I was right, but here's the numbers. You can see we pretty much have hesitations and moves. So we got one more mark, and this is where I talk about that 121 and just round things off. 121, 134 is actually a number, you know, so there's still a lot of upward pressure here. Now, there's not enough data to run the algos on. I could possibly cut back some of the metrics and see if I could get something to calculate. Let me just see here. They're on 150. Let me go to 50 and just see if I can get, this is about as low as you can go. Yeah, okay. Let's do this. So this will just take me a minute to update these. So what I'm doing here is I'm changing the coefficient from 150 to 50, and now we can see that all of the, let me zoom in here, all of these indicators are showing peak values here. Let me just get some numbers. Yeah, so I would argue this is probably fairly appropriate where we are here, that this has been my concern. I would like to see us hit this monthly. I've been talking about we have a couple weeks left in Bitcoin to keep a positive configuration going here. So that this is, putting this up into that 120 handle. So there's we stalled right at 112. There was a 113 number I was talking about. So we stalled just a little bit below there. Let me just see if I can get to these numbers here real quick. Yeah, so the number is 112 even. We still have a nice positive month going. So we look at the 114.4, 119, and 124 would put us just above this 120,000 mark. So there's still some possibilities. My concern is as we get into a little longer that there's going to be, as we come into the dog days, won't be until maybe the fourth quarter of this year. And just kind of addressing this situation, and most of the time, like 90% of the time, Bitcoin is really a risk asset. So it seems to play along with how the equity markets go for the most part. It's had some leadership on its own, especially in the last few months. But the bottom line is, if risk assets do come under some pressure as we come in, so I'm still maintaining my attitude on the possibilities of a negative quarters from the economy on Q3 and 4 and maybe into 26. I'm still maintaining that. I'm not seeing anything that's deviating my analysis on that right now. There's a couple of things that would have to happen, and I'll address them if I start to see some of that happening. But for now, I'm still locked in on Q3, sometime middle Q3, Q4, we should start to see some softness in the economy. So let's see what you folks are chatting about. Yeah, that's interesting, Pamela. You get, perhaps Trump will simplify and not appoint a new Fed. I think he's already talking about this guy that a bunch of them love. Yeah, so that's fine. That's what the Fed does, opening swap lines, of course. That's their job. They don't like talking about currencies a lot, but they do an awful lot back in that. And I don't know. David is asking, what's the circumstance for U.S. dollar to collapse and not exist in a world? I don't know. Nuclear Armageddon? I don't know. Yeah, I get Oleg. I see what you're saying. The swap lines, those it may become material, but right now everything looks pretty stable there. Yeah. So somebody just brought this up, and I brought this up last night. This chart. So I've got it on the screen here. Let me zoom back out. So I put in this. This is the core CPI. I put this in the Substack last night. You can see we're seeing a little bit of this bounce here, and it's interesting. We came down. There's something else, and I meant to mention this green dot here is a pivot. This is most likely going to be the floor, and that's 1.87. I don't think we penetrate that. If we penetrated that, then we're probably going to go into deflation, and I don't see that. Red dots are suggesting we come back into these moving averages, and let me just get those numbers over here. That puts us back at nothing big here, right? Up around 225, 2.25, 2.5. There's nothing big happening, and look, we're stable. Move this out. We're stable into third quarter of 26. There's possibilities. I mean, everything's still coming down. We're trying to normalize from the standpoint of this big spike that we had, and these events, especially in when you're looking at CPI or these big monthly numbers, they just take years to normalize. Yeah, so I want to bring up something here real quick. Let me just go to economy. Yeah, I want to bring this up. I haven't brought this up for a while. Let's do this. We've got plenty of time here to kind of go in a little segue here. This is interesting because this is the Fed funds rate, okay, and you can see everything is still heading down. We actually have live fib targets to the downside here, down to 325, which is kind of my target coming down here. Red dots are suggesting as we come into year end. This is September where I have my cursor right now. There's definitely some downward pressure here. And if I go back, let's I haven't shown this chart for a while, but this goes back to 72. But one of the things that I've watched happen is whenever we have the Fed freezing rates at a high or a low, after that period, we tend to react all the way back to where we were, which is kind of an interesting scenario. But this is right here, 2000. This is 2008, and this is where they lowered rates in the GFC. Then they froze them from 2009 all the way to 16. They let them off. They're stair-stepping up, and then they pushed them back down. This is the pandemic, and now then they started this floating up, and then they froze them again. This is the freeze at basically 525, 550, and this is the average Fed funds rate that we're seeing here. And now we're seeing this coming back down. So maybe this would 240 would be a big number, but this you can see the downward pressure is coming. So what I'll be watching for is around this pivot number here, which is right at 350, 325. I think this is where we bottom here. This pressure here, I think once we get here, let me bring this up, that these indicators are all going to be normalizing, and this is coming out. This is the a monthly number. I think we can get more dynamics here. Let's play with this a little bit. Yeah, so this is probably a better sign for the daily. This was interesting. At least I think it is. Let's bring this up. So when we were over here, we got fib targets down, and this was 0. So we came right in between 0, and we froze them there during the pandemic. And then we got this big pivot point, and now we have, these are live numbers. We've got 3.25, 240, 180. I think these are extreme. Most of the time we'll hit at least the fib target 1. And so that would put us, around 3.25, and we'll see how these things play out. The algos are just still reacting. It's interesting because of the markets not being floating freely. Like during this time back in 2021, if the Fed didn't have the foot on it, keeping it down at 0, we would have went back to probably 1.5 to 2, 2.25. On the Fed funds, but they froze them down there and they kept them artificially there. It's the same thing when we were frozen here at 5. We might have continued higher, but they froze them there. Then they got inflation to come down, and now we're been kind of frozen. Let's look at this. So we've got another little flat going. So every time there's a flat, so the Fed is holding rates right here at this 3. I think they would be already corrected down on the front end if it was a market rate versus a Fed decision rate. And those of you who haven't been around for as long as I have, back in 70s and 80s, the Fed would adjust rates to the market rates. It wasn't the Fed setting the rates. They would in certain circumstances, but for the most part were market-driven rates, and the Fed would adjust to the Fed funds rate as there was demands and the typical structural market type supply and demand type situation. We've gotten into this actually going back to Bernanke. Maybe we have the data here, but anytime we see a flat, it tends to reverse direction. So this isn't a very long one, but if they keep it for another month or so, we could see rates start to increase a little bit. But I think this flow and where we are in things are going to continue along this slope and ultimately get down to this 3.25 number. Let me zoom back out. Yeah. So this is how I see things coming. Maybe it's pretty drastic. Expect a 2.5, 2.75. It's possible. I'm telling you folks, and I've been saying this for a better part of 2 years. I heard it. I had to be one of the few people that picked up on it. But Powell told us, and he's going to be out pretty soon. Okay, his days are numbered. But Powell told us that they did not want to be in the business of micromanaging the yields in the economy. They wanted to just keep the so-called, I do air quotes, mandate, dual mandate. That's all they want to deal with, and they want out of this business. So they're going to let markets drive the rates. And when Powell says he's driven by the data, he actually means it, I think. And I think with the exception when it comes to last September, I don't think that was justified, but it's okay. All right, so let me just see if anything else is out there. Just a little segue there. So Roger, what do you? I'm just trying to see. You're saying why, Bob? Why? Yeah, we can do. Let's see what time we got here. Yeah, we'll do some silver. We'll do a couple things here. Yeah, Oleg, you're probably right. They'll cook the CPI. Yeah, listen, we're not out of the world I mentioned yesterday of like this employment numbers being cooked, all this stuff. We still live in that world. That's for sure. Yeah, I like Marty's comment. Never sell Bitcoin. You're able to borrow against it. That's pretty good. Hang on, I'm just trying to get to one last thing here. I'm just looking at a couple more comments, folks. One second here. All right, let's do silver. What is it? SLV, right? Let's use the ETF. Yeah, so silver's starting to move. I haven't looked at the silver for a while. Let me kind of get out of the band. It's broken out of the. Looks like this is kind of a climactic peak where we're going to come back in here. So there's a potential V top here on silver. We've exceeded the, I'm just trying to get the numbers up here, RTX 3313. High's been 3354, last 3339. So yeah, we're getting to the point. This is what, a daily chart? Let's do a weekly. Yeah, so we got RTX sell signal last week. We do have 3 fib targets in here. I'll blow them up so you can see them down here on the bottom. And 3179, 3378, so we're close to that number. 3502 is the peak fib targets up here. And we have this big pivot in here that is very important. That's going to give us, that's going to be right at around 3380. So that 3385. So we get above that, we'll probably hit this fib target, but we're definitely looking to peak out. And this V top is even bigger on the, I guess since gold's been stalling, people have been running into silver here, but this is pretty close to done. So let me do, I saw something here. Let's look at the miners and see how these stocks are playing out. Yeah, so everything has this this V top. Let me show you where that is right here. So that's these little peaks right here. Right here, you get 3 of them lined up and straight down momentum. So typically you have the RTX sell signal this on the miners. Everything's going to come back in. I think the SLV looked the same way. Let's just take a minute and let's do that. Yeah, so we've got the same look here. It's fairly clean. So what that means is, sorry about that. What that means is that the ranges are from a extreme 3403 this week, but the red dots coming down in here. There's still a monster trade here, right? So we're at 2.12, so it's going to take a while to bleed off. So I suspect we have probably around a 60+% chance of getting up to this 35 level plus, and then we probably will retrace in. That's all this is telling us, that the momentum's going to bleed off. Doesn't mean this is a top, but a lot of times we do get a top off of these V's. So I always look at that. So what you want to watch for is how we finish this week. And if we finish on a negative note from last week, then we'll probably get another week or two down. Nothing drastically heading back towards this 10-period moving average. All right. All right, I'll come back up here, folks. Appreciate everybody hanging out. Just looking at some comments here again real quick. That's funny. Fed funds rate are newly best fund rates. Yeah, we'll see. We'll see if we actually have a real Treasury Secretary. You have to look, when you look back in history. I mean, Bob Rubin was probably one of the better Secretary of Treasury there's been for a while. Yeah, I think it was pretty impressive from during that time, and that was when they were balancing budgets, and they were actually that's when it was okay to cut fat out of the government and balance budgets. Newt Gingrich, Clinton, those guys did a real. You look back in hindsight, you look at the history books and look at the numbers. You got to like what those guys did. They did some good stuff. They made some mistakes coming out of that, but there was, that period of time from a balance sheet standpoint was pretty good. We're just out of control right now, and it's everybody knows this. And you know, I don't troll Ray Dalio real heavy, but he is stuck into this world is going to come to an end with the debt cycle, and it's possible because if they don't change some things, we will be in exactly where he says. But I think history will show that we are making some changes, and maybe there's a couple scares in there to drive that change even more. There's nothing like a good scare, whether it's a health scare or whatever, to make somebody, something, some entity to change its habits. So anyway, folks, appreciate everybody watching as always. We'll be back same time tomorrow. Get the Substack, kendallreport.substack.com. $8, free trial, and you can get an $80 annual if you want, and that's the cheapest way to go. Anyway, we will talk to you tomorrow. See you then, and looking forward to it. Take care.